Welcome back, traders. This is our gold weekly review. My name is Angelo Zitis, and we start with our title for this week, which is Can Gold Trade Even Higher? We must say that gold yesterday added over $20 in value, mostly in the European afternoon. Our first point for today is the relationship between gold and bond yields. Now, a lot of traders refer to the bond yields the US bond yields in order to try to understand which direction gold traders could be leaning towards. All right. So what is happening in the US bond market could give signs of what could take place in the gold market. So the relationship between gold and bond yields could be adverse. This is exactly what we observed yesterday. Yesterday, yields on the 10-year benchmark and the 30-year bond slipped approximately 6 basis points. For the 10-year benchmark, this was the largest daily loss since May 31st, so it was a significant loss. And gold prices were glad to take on long positions, as we will see in technical analysis, as investors feel that the precious metal provides more opportunities for profit taking in the specific circumstances. Our second point is trade uncertainty resurfacing. All right. First, the uncertainty of what exactly is happening in the talks between the US and China. Various reports indicate the Chinese have made demands that could be contradicting the US side objectives in order to sign a deal. Now, gold traders are sensing this. This was also evident by the US President Donald Trump comments that he just threw in a comment about new tariffs on $325 billion worth of goods. And, gold traders sense this uncertainty. They sense that the worries on global flow could be returning. They were silenced until now for the past maybe 2-3 weeks, but now they're returning to the spotlight. All right. And gold could be energized because of this. It could be getting support because of this. Our third point is monetary policy adjustments. This refers to the ECB and the US Federal Reserve, which are expected to take action to counter global economic uncertainty and weaknesses. All right. The expectations provide space for gold traders and investors to take position on the market. All right, gold traders could be expecting to capitalize on any monetary policy news or adjustments. Beware of this. And we move to our gold 4-hour chart. So we entered a line which indicates when July 2019 started. First thing I want to note is that gold has moved between our R2 1435 level, which it touched once. This was a false break, but it still remains the highest point it reached. This was at the beginning of July, and the lowest was the S3 1382, also reached in the beginning of July. These are the two levels that gold has moved between in July 2019. Yet, as we move towards the 11th of July, this sideways motion has basically narrowed, and it is trading actually between our R1 1425 level and our S2 1400 level. All right. This is for you to take a note and form your own decision upon what is to follow. All right. Then I would like to say that yesterday gold prices initially were moving downwards, and they bounced off the S2 1400 level. It came right up, aimed for the S1 1414, and then moved higher to reach the R1 1425 level. Now, even higher, as we said, we could see the R2 1435 level and surpassing that level, because there are analysts and investors that believe that gold could be a solution to many problems out there, many economic uncertainty related problems, and gold could be aiming for a higher level. All right, so keep that in mind. However, If gold is to break below the S1 1414 level, the next level is the S2 1400 level, and then we see the S3 1382 level. However, we will also like you to take note of the RSI indicator below our chart, which is currently moving between the 70 and the 30 level. And this indicates some uncertainty on further direction gold could take. And so gold traders are currently in a neutral state, I would say. Now, if you've heard something in this report that you found useful, make sure you apply it to your trading. From everyone here at IronFX, solid trading. We'll see you next week.